Our next session is imagining the world of fintech in 2035 and trying to pass what trends are already taking place now that are going to shape that future. So to discuss that with me, please can I welcome onto the stage Ronit Ghose, who's the Managing Director and Global Head of the Citi Institute for Future of Finance, Monty Metzger, who's the Founder and Chief Executive of LCX, and Nawaf AlMaskati, who is the Founder and Managing Director of Tanami Capital. Welcome. So fintech in 2035 is what we're going to be chatting about. Can I maybe start by asking all of you the same question? Ronit, we'll start with you, which is, when you look around today at the kind of various technologies that are being invented and kind of are integrating into financial services, if you had to pick one of them, one technology, what do you think the one that will define finance in 2035 the most is? Just the one.
Yeah. Oh, I think it's on now. Perfect. Yeah, there we are. There's a time lag. So I guess real time. No, just kidding. So the one technology that's going to change everything is obviously AI. AI changes everything about the way we work, the way we live, productivity, lifestyle, and it's going to be a bit like the fish swimming in water that doesn't see the water because the fish is in water. AI is going to be everywhere. We've been in an era for the last 10, 20 years of everything getting faster, everything getting more digital, everything getting more intuitive. There are lots of things that maybe we did. I'm looking around to see maybe Monty, you and I did when we were younger. Josh is clearly younger than us, but we were just used to a level of pain in process that the younger generation today will not accept. Everything has to be intuitive, real time, always on. And AI is simply going to be the next layer of that. I always use the analogy of cloud computing and say, without cloud, the fintech revolution we've had would have been stillborn. The reason we have what we call fintech, financial technology, the great fintech firms around the world, they really came out of e-commerce on the one hand and powered by the cloud on the other. Alibaba and Alipay, Revolut in London, where I spent most of my career, those really came out of e-commerce and cloud. The next generation of these breakthrough category-defining companies are going to be AI native. I don't know what they are, who they are, but they're going to be shaped by AI. You're going to have maybe not one-person unicorns, as some influencers say, but you have one-person finance departments. You'll be able to build a new fintech with literally one or two people in finance and compliance and HR, because AI will empower these. In large organizations such as ourselves or banks like ourselves, it'll obviously be a very difficult and long transformation process, but it should make us closer to our clients and just able to, particularly with our retail clients and in the US where we have a big retail business, able to deal with those mass consumer clients like we deal with our private bank clients. So if you're a private bank client of Citi, say in Geneva, the kind of level of personalization you get, relationship management, customization, that's the nirvana, that's the dream, being able to do that for our mass clients. So I go for AI, but I'm sure other people will say stable coins maybe. Or
So yeah, now if Ronit's taken AI, so
I'm going to take AI. I would, if I have to pick two technologies, and I'm not going to take tokenization because I'm sure Monty will take care of that. I've done AI around 17 years ago. And if you allow me just a short story just to show how AI evolved in importance. So 17 years ago, I was doing AI for the first time. And obviously at university, I'm not that old. But it's the department that was doing the earlier applications of AI was actually in the basement of the oldest building. Smelling mold is kind of the tradition, right? Whenever you go to the lab, this is what you can smell. Fast forward 10 years after that, when I visited the campus again, the department has been relocated to the nicest building. And guess what? You cannot smell mold anymore. It shows the evolution and the importance that AI has been gaining in recent years. But really the important point to mention here is today we've haven't even scratched the surface on what AI can deliver and what AI can bring, right? Because what I've been exposed to over the last 17 years is much more than what most executives today refer to as AI, which is large language models, the likes of ChatGPT or Claude, or even chatbots that get basically programmed and reprogrammed to serve consumers, right? I'm talking about things like reinforcement learning, and evolutionary AI, basically algorithms that don't even need us to program them, right? They will program themselves, they will operate, and they will avoid the bias that gets baked in by humans, right? So this is, I'm not talking about AI taking over the world, but really algorithms that are able to do credit analysis, that are able to match different systems, run really complex calculations without the control or the calibration of a humans. But on top of this, what I see and what is most important, I think in 10 years, everything in finance is going to be run by algorithms. Machines are going to be talking to each other. They will run business, they will run finance, and they will be taking decisions that are today taken by humans. I think the important role that will be played by AI, the true really addition of AI, is it's going to play, if you're like an orchestrator role, it's going to play a governance role. So when two transactions are confirmed and run by algorithms, AI is going to act as the governance. The same way humans today make sure that AI is behaving the right way. I think AI 2.0, which we're likely to see over the next few years, is really going to act as the judge of the different algorithms. So it's going to govern itself. I think this is the biggest movement that we're going to see over the next few years.
Thank you very much. It sounds like it. Monty, also AI or something else?
Well, I have to agree. In 2035, money will not just move, it will think. With programmable finance and blockchain as an underlying layer, we have now the tools and the technology to reinvent finance and money as we know it. But also, I think a key technology which is underestimated right now is tokenization. If we look at the next 10 years, it will really unlock a new wave of global trade efficiency, transparency, and enabling global settlement with instant settlement as well. So in 2035, crypto and blockchain technology won't just be an asset class, it will be an underlying operating system for the global economy and for global trade. So when I look back at my personal history, I always had been a futurist. I've been starting companies as an entrepreneur, but also one company, we had been looking for the next big thing. And with that, we had been looking into all different kind of technologies, including money and payment. So I was lucky enough to discover Bitcoin early 2014 already. And we were looking at Bitcoin back then was at around $1,000. And then it dropped to $100. And I thought, now this topic is over. But if you have like a back perspective, you see that the technology itself is here to stay. And blockchain and crypto and the whole invention over there is something which nobody can stop anymore. So it's not a matter of if, but just a matter of time. And for sure, 2035, we'll see a tremendous wave of financial assets and commodities being tokenized on chain.
Perhaps you brought up another really kind of interesting topic there, Monty, which perhaps I can stick with you to ask about. You've been thinking about the future of money for some time, it sounds like. And as kind of what we think of as money evolves, for adoption, it's going to need to contend with two kind of demographic trends, right? One is increasing number of digital natives, people who, as Ronit said at the start, are used to having this kind of friction-free existence, of perfectly happy using digital assets. And on the other hand, it's going to have to contend with aging populations in most of the world. How do you see the kind of future of money evolving between those two kind of forces?
always had been looking at trends cycles. So when you see the Gartner trend cycle with kind of trends picking up, having mass adoption, I think we're still at the beginning if we look at crypto and blockchain technology. And there, if you look at like the opportunities, what's going to happen right now, we do have a killer app, so to say, which is stablecoins, where we see really a global adoption happening right now. So if you look at like crypto from the early days in Bitcoin, the Bitcoin white paper, you can see there are different phases. So the phase number one was crypto native assets. Bitcoin, Ethereum as a utility token. And so these are crypto native assets living on chain, are useful to actually use blockchains and everything. And Bitcoin is a digital gold, obviously. The second phase is now with a first wave of tokenization, which is tokenization of money. It is important as a settlement layer for trades and speculators who are trading altcoins and all different kind of cryptos at LCX and other exchanges. And then the third element is really the tokenization of everything. I often say everything that can be tokenized will be tokenized. And that's what we see, that every financial asset, every commodity, every debt instrument will be living on chain represented by a token. And this is going to happen right now. We are building these as a tokenization framework and also with total tokenization, total finance. We are basically enabling that to happen right now. But in the next 10 years, we are going to see mass adoption in that. And it might be 30 times, 50 times, 100 times bigger than the current cryptocurrency industry, because we are entering into traditional markets, TradFi, how we would say, traditional finance, and combining that with the power of innovation of the blockchain.
Thank you. I would like to ask our banker on the panel, Ronit, in this kind of this new world, how does the role of banks change? Like, we're talking a lot about kind of decentralized finance. Do we still need banks? I suspect your answer is yes, but tell us why.
It might be worth, without becoming too philosophical or historical, going back to what is a bank? Because the question I get asked a lot is, do we need banks? Do we need bankers? And I always say, but what do we mean by a bank? So what is a bank? A bank is a regulated entity that does something with money. And what does it do with money? It allows you to move money. It allows you to store money. It allows you to invest money. But in particular, in modern finance, in the modern economy, or the last 50 to 70 years economy, a bank is a regulated institution backed implicitly in some way or the other by society through regulation, which means that your deposits are considered safe. Now, how this works out in the future will change, just like it has already changed. There's no before and after. If you look at banking and finance over the last 100 years, let alone the last 5,000 years, it has constantly changed. So people talk about, oh, stable coins are coming. We've written a big report saying we're super bullish on stable coins and they're going to grow. But look at how capital markets have changed credit provision in the last 20, 30, 40 years. Look at how the money market fund industry in the 1970s and 80s changed savings in the US. Today, if you look at the financial structure of the US, deposits or household deposits and corporate deposits, they're like a quarter of all financial assets. In many parts of the Middle East or Europe, it's the opposite. They're about 3/4. So banking systems are very heavily deposit-driven in the Middle East, in Asia, in Europe. In the US, it's opposite. It's not. So how finance looks, how banking looks, actually varies tremendously, both today across geography and over time. I was in a round table, closed door Chatham House rules, and I got exactly the same question yesterday morning in Dubai. And I looked at my crypto native friends who work for crypto companies and said, yeah, we've been around for a couple of 100 years. I don't know if, hopefully we'll still be around, but you will just become a bank. you're doing money stuff already. As you get regulated, as you move out of the shadows of the gray economy into the regulated economy, you're going to be considered some kind of bank. Look at fintechs. Fintechs over the last 15 years, 10 years. Between 2010 and 2015, all these fintechs emerged in the UK, in India, in the US, in China. And the mantra originally was a little bit like my crypto friends. We're going to kill the banks. We're going to make you... They're our biggest clients today. These fintechs, we work together. We're frenemies, just like we are with other banks. By frenemies, I mean big banks are always competing with other banks. So like enemies, but we're also friends. We collaborate to make money move. It's exactly the same thing with fintechs. And the same is happening with blockchain and crypto. Many blockchain and crypto companies are our biggest partners and clients. We've helped IPO a few of them in New York this year. We work with them and hopefully we'll provide them with other solutions soon, including custody. So I don't think it's like, will a bank exist? It's only because we think, oh, will this type of money exist? But remember what finance, do you remember your first savings account, Monty? It was a passbook. For me, anyway. Monty's like, I'm not as old as you. It was a passbook. Like if I went to my 11-year-old kid, my youngest kid, and said, here's a passbook, go and open he'd be looking at me going, what is that? I'm doing it on my iPad, or I'm doing it using my VR wearable device. I'm like, what is this passbook thing? That's how we opened our first bank accounts. When we first opened our bank account, we typically in the UK do it when we first day at college, and we'd open a bank account with whoever our parents banked with. You don't do that today. You already have a virtual card open through open banking and APIs that you have already as a teenager today in most countries. So finance has changed tremendously and it will carry on changing. And there'll be tokenization in there, there'll be AI. One area where I'll disagree with the previous speakers is I'm not sure AI is going to be everywhere and tokenization, but the governance layer, we're still going to be the governance layer, the humans. Because for the foreseeable future, we exist in a human-to-human society. Maybe in our lifetimes, we go into some kind of hybrid society of humans and machines. But today, our laws, our societies, our cultures, our regulations rely on a human being responsible. If we make a mistake and break a law, I can't say AI told me to. AI is responsible. I or my boss is going to get debarred from the industry or worse. There's human accountability, and we as humans want that. We can't outsource it to machines. What machines will do is take away all the stuff that's just kind of boring. All the, finance is like most industries are like today white-collar factories. Just like the Apple factories in Shenzhen and around China no longer look like the Apple factories of 20 years ago. If you went to an Apple factory 20 years ago, you saw people using their hands, right? Making things with their hands. The final assembly on the Chinese manufacturer. It's all robots. Just like autos did that 60, 70 years. It'll be exactly the same in finance. AI is basically our orchestration layer, but not the governance layer. I think, particularly if there are regulators in the room and central banks, which I know there are, if I came and said, yeah, I'm an MD at Citi, but the machine told me to do it, you would just laugh at me and say, no, you're responsible.
That's
No,
right.
Ronald, I totally agree with you. If we were really giving away control, right?
Yeah.
There will be trillions of transactions that are done between algorithms. And what I was referring to is not really the ultimate governance, but really the
orchestration
of what's
getting
happening.
stuff done. Yeah,
Exactly.
That's
yeah,
right.
agentic
But
AI,
Ronit, you
agentic commerce.
also mentioned the paper example, and it's right. Like if you think about history of a role of a bank and institution, I believe in 2035, trust won't be written on paper. It will be verified on chain. And everybody who's mastering now global settlement, payments and tokenization will redefine finance in the future.
Yeah.
And we now see it with like global trade. Everybody wants to be part of the stablecoin economy, enabling like a new competition in currencies also, where now the US administration sees an opportunity to bring the US dollar into like global markets even faster and more efficient. And it's a new competition where this technology becomes a tool of power.
Do you see stablecoin technology over the next few years entrenching the dollar's dominant position in the financial system, or do you see it eroding it?
At the moment, we see it growing rapidly. So the US dollar as a global reserve currency will be strengthened due to the adoption of US stablecoins, US-based stablecoins, whether it's USDT, USDC, or now all these new emergent ones. And there might be even new stablecoin ecosystems coming up. Imagine large retailer, commercial companies, or even like travel companies could introduce their own stablecoins and profit from that treasury bond markets and earn a good interest. And you see how Tether is probably one of the most profitable financial institutions on the planet at the moment, with $30 billion in profits this year, approximately. So, and with that, you see, on the one hand, there's this evolution of a usage, so people can relate to it. Now we have a dollar, a digital dollar, and there might be other like central bank digital currencies or private institution launching all different kinds of digital money. But then the underlying fact is that this money needs to be stored somewhere, and the most natural one being a digital format, meaning that it should be tokenized treasury bonds. And when I speak about tokenization, it's important to understand it is a digital representative, a digital twin of something which we probably know in the real world. So that's why we in the industry talking about real world assets, RWA, where we have one underlying asset which will be represented in a digital format. And we had been at the forefront of that in several pilot projects with tokenized bonds we issued a couple of years ago already, and now taking it to the next level to actually enable global trade on commodities. We started with diamonds, gold bars, platinum, silver, and now going into all different kind of commodities from nickel, copper to even crude oil, which could be settled instantly and enable a global trade and not wait for 30 days until the banks move the money from one country to another.
Lots of commercial organizations issuing their own stable coins and using it to profit from treasuries sounds a lot like Ronit's kind of, there's going to be a lot more banks out there.
True.
Because that's exactly banking activity. Now, there's a technology that we haven't talked about yet, which slightly surprises me because for the past few years it's come up on an awful lot of the panels that I've sat on, and this is quantum computing. Nawaf, I know you've been thinking a bit about this and the role that it's going to play in finance over the next few years. Could you talk a little bit about it?
I think there are things really to be happy about when it comes to quantum computing, but more things, and I'm sure gentlemen would agree, to worry about when it also comes to quantum computing, right? The good thing we were discussing, it's going to make it very easy to run really huge calculations at the same time. So things, implications across trading and optimization would be much easier with quantum computing. But I think the biggest worry here with quantum computing is really cryptography and security, right? Because the ability with quantum computing, we lose it renders basically all the protections that we have today useless. Because if you have quantum computing, then basically every protection that we have today, unless it catches up with the quantum computing, then it's virtually breakable, and you can open any system in the world. So while it actually has its benefits and its good applications, it also makes it challenging for basically everyone, regulators and banks alike, in terms of cybersecurity, being able to secure everything from tokenized assets to even your internal systems.
Yeah.
But just to add one more point on Ronit's on the banking, right? I'm an ex-banker, and I think banks will always be there. We're going to shift from what we understand, at least in the region today, as a one-stop shop where you use your bank to do everything, including part of your investments, to being maybe a guardian, if you like, an infrastructure player in the system, exactly what Ronit mentioned. And we're going to see more partnerships happening, less frenemies, more friends, that will be like we see Legos today, right? It's going to be the building of the experience of Josh, of Monty, when it comes to investments, managing your money, spending your money, everything, right? And the biggest trend we've seen is even the largest banks in the world, they haven't, despite having all the resources, Citibank included, have decided to they have at least on average 10 fintech partnerships. And this number is only going to increase tremendously over the next few years. And this is not to say that banks can't do it in-house. It's the age of open banking where everyone is going to be interconnected, and it's much easier to just be plugged in the system where in a place where you excel at, and then really let the rest of the ecosystem deliver the services that complement your offering. And I think this is really where banks are going to excel. They're going to be the infrastructure of the system.
I agree that they're like an infrastructure layer, a settlement or a custody layer, but they're also, and it's not true in every country, and you'll know obviously the market here or the region better than me, but they're also a reputation layer. And that's really important because money is about trust, and reputation is part of that, but money is ultimately trust and debt. Think about what money is. If the four of us were on a desert island and we became friends, it'd be kind of boring because we need more diverse company, but because gender diverse. But let's say the four of us, we became friends, we wouldn't need money because I'd do something for Josh, he'd do something for me. We'd have like a debt to each other. And then as some of you, maybe in that initial rows, joined us on the desert island, we'd need to write it down onto contracts. That's how money began. And so the oldest form of money that exists is, or the oldest actually recorded form of writing that exists in the world is clay tablets from Mesopotamia. Not love poems, not religious texts, it's a debt contract. It's about 5,000 years old because someone had to write it down and then store it in the temple. Someone had to just write it down and store it. But before that, it was oral. Josh and I would have a debt to each other, and then we just work it out. And if Josh didn't pay his debts back, I'd stop doing things for him. And so then it evolved, and over the last couple of hundred years, we have this thing called banks. I mean, depending on how you define it, people debate this as to when the first bank was. I mean, the Italians claim it, the Chinese will claim it, but whatever. We formalize this. And so what we forget is that we're all self-selecting. We chose to come to an event or speak at an event or attend an event on fintech and money. For the vast majority of people in the world, money is something that happens to do something else. You know, I have a card because I go traveling or shopping. I have a loan because my business needs it or I need it for my house. I'm telling you what you know, right? You don't care about the mortgage or the loan. You care about the house. You care about the holiday. You care about the car, not the money. And so in consumer finance, or in a lot of this, we're moving towards, and that's why apps like Uber are so great. You just abstract away the payment layer and making money invisible. Ultimately, we're all interested in money and fintech and finance, but for the users, the less they have to think about it, job done. So we're going to be embedded. So you could say like an infrastructure layer, but then something at some point, whether it's for payments or for savings, we go, oh, do I trust that player? Now, it's fine if we're all sophisticated professionals, we go, it's on chain. But for the vast majority of people, it's like, who is it? Do I know? That doesn't have to be a bank. It could be 30 years ago, I was being pitched in the UK as a young analyst. Oh, it's going to be the retailers. Everyone trusts the supermarkets. They have lots of data. In fact, the phrase data is the new oil came from a guy who used to work for one of the UK supermarkets. And then he wrote it down in, I believe, an Economist magazine article or something. And because they had all this data and the banks didn't know how to use data in their retail businesses. And all these supermarkets set up banks in the UK and then they all ended up selling their businesses. So it may be a supermarket, it could be a retail brand. Maybe for young people, it's social media they trust, or they're some influencer. So that reputation layer is going to be, but then what will happen is that as soon as they start touching money, the central bank or the regulator will say, oh, you're touching money. You are now a bank. Yeah. And then they become a bank. And this is what's going to happen to a lot of these, like we've seen with the fintechs. They start with a payment license, then they end up, eventually everyone grows up. You have to wear a suit, but you end up becoming a bank. Or maybe we'll call it something else. Maybe we'll just call it regulated financial institution.
Yeah, I mean, Ronit, you make a really interesting point, right? Where really, I mean, just to add maybe a regional flavor to this, right? For the longest time, we've been looking at ownership as a way of investment, right? It's really, you have to own the car, you have to own the house, you have to own the flat, the asset, as a form of investment. Arguably, we're actually now moving away from
sharing
this, right? I mean, with the young population, we're looking at, people are now looking for access. They're not looking, I don't need to own the house. I need to have the income or the benefit that comes out of it, right? I mean, apart from the
house is still an emotional asset. The car is maybe a better one, because we just move from A to B with a car.
No, that's for sure. But I'm talking about investments more. I mean, previously we're a region that have been addicted to real estate, right? As a form
many regions
of building wealth, right? But we're slowly moving. If you look at the younger population across the GCC, right, and all the fintechs that have been coming out in the last few years, there is a trend of people moving away from really direct ownership to really owning on the chain.
Your point on younger, the GCC is really relevant, right? Because Saudi, Bahrain, UAE has some of the highest consumption rates of TikTok, social media, Instagram. And for that, average population is what, like 26, 28, something like that in the region? That population that's growing up just on that, because in their whole adult lives, that's all they've known. It completely reshapes what value is. And
But ownership is totally redefined now also, as we see a new ownership economy coming up where people could own digital goods or digital representatives as a tokenized asset much easier while the underlying asset is not moving. So we have now gold bars stored in Liechtenstein, Switzerland, and you can trade them on a global level without moving the underlying asset. And with my history of like 30 years in digital, I've seen the growth of the Internet of Information. But now we are in a new era where we talk about the Internet of Value, where value and ownership are transferred to a much broader degree. And I believe that this, first of all, the tokenization, the assets will be digitalized. And then the second part is the infrastructure, which you also mentioned, where we had been at the forefront of building this like tokenization infrastructure and also the settlement layer as an exchange. And I'm a true believer that the next Wall Street won't be a place. It will be living on a protocol, decentralized and very international globally. While we also embrace what Ryan had been doing over here and embracing a regulatory landscape, innovating fintech, and we had been called a hidden champion doing that in Liechtenstein for now almost 8 years, who, like the small country, came up with a regulatory framework to enable us to be regulated and compliant from day one. And now we're taking this global. And that's why I'm super excited to be here in the region to learn. And I saw that the doors are open for us and others to join and innovate here in the region as well.
I could honestly listen to you gentlemen talk about the future of finance for the rest of the afternoon. Sadly, we're coming to the end of our time. A last very quick question to each of you. We are sitting in 2035, looking back over how finance has developed over the past 10 years, and we're looking back to today, 2025. What do you think the most important kind of decisions and investments being made today are for determining that future? Monty, maybe I'll start with you.
So I think looking back sitting in my armchair in 2035, looking back the last 10 years, I would probably give an advice to myself, to my younger self, and say, be brave, go ahead and not only talk about what we said today, tokenization, crypto, financial rates, infrastructure, you need to go out and do it. So from my history as a futurist, I've been talking a lot, but actually doing it, making it happen is even more important. We are at the stage where execution matters and not only the idea. So we need to make it happen, and I'm excited to be here at the Fintech Forum to see that you're trying hard to make it happen already today.
Thank you. Nawaf, same question to you.
I mean, honestly, I don't see us sitting here in Fintech Forward in 10 years, because Fintech is going to be mainstream, right? Where if you don't have the tech in 10 years, we will not be able to see you, right? So, and across the technologies, I mean, tokenization and AI is really going to form the future. But if you don't start adopting both today, in 10 years, there won't be any fun to do.
Absolutely. And finally, Ronit.
I think one of the biggest things when we look back on the last 10 years from 2035 is going to be how innovation and new things, you mentioned Liechtenstein, we could say Bahrain, smaller places. The future is already here. It's just, it's an old saying, the future is here, it's unevenly distributed. It's going to carry on happening like that. The future is not going to be just built in one place, in one large country like the US or China. And if you've, on your vacations, like we spent some time this summer going around the Hanseatic League cities in Northern Europe, these are trading cities in the 1400s. And they're fascinating because if you Google, so I live in between Dubai and London, tallest building in the world, Burj Khalifa, right? 800, whatever, meters high. For almost 1,000 years, the tallest buildings in the world were different cathedrals in Europe, by 800 years. And if you track where they were always trading cities, either in the Holy Roman Empire or the Hanseatic League or in England. And each one you track, each spire gives you where that little town, which are often irrelevant towns now, but those are really important. They were part of networks. We've lived in, for most of the last 100 years, big nation states driving history. I think in this digital era, these kind of recreations of Renaissance city-states, little towns that punch way above their weight and can invent or help co-create the future. That's, for me, that's what's going to be really exciting, because the world doesn't just get built in South China or in the west coast of the US. The world's going to get built in all these little places, and hopefully, you'll invite me back in 2035. May not be this event, but we'll be able to see how that's happened in the last 10 years. And that's what excites me. One of the privileges of being a city is I get to go and travel around the 95 countries you operate in. And it's just fascinating watching the future being built all over the place. So thanks for having me today.
Ronit, Nawaf, Monty, thank you so much for your time.
Thank you so much.
Thank you.
Thank you.